Hola everybody. Today I feel very sorry for some Spanish investors. Let me tell you a story of Bankia. You've got 7 regional savings banks called Courtiers. They're like building societies in the UK. They lend money to their local communities, business and individuals. Unfortunately for those Courtiers, they've also got politicians on the board. So the loans are fed out to individuals, and of course the politicians want to keep their voters appeased. You've also got a situation where you've got very low interest rates in Europe. Very low interest rates because Germany wants to avoid inflation, but those interest rates are too low for Spain. And what happens when you've got low interest rates that are too low for the country is too much money gets lent, and it gets lent to the wrong types of entities, and so you get a boom. And this time you got a housing boom. When the housing situation went bust, as inevitably it will when you've got 25% unemployment, which is what Spain's looking at now, you find the value of everything drops, and the banks that lend the money are now skint. So if you're a government not wanting to upset the local depositors who are also your voters, you combine them all into one big entity and you call it Bankia. So it doesn't make any difference because it's undercapitalised. You can't raise money on the international market because New York and London bankers won't buy it. So what do? You go to the poor Spanish investor and you flog them stock. A few months after this stock is sold to Spanish investors, the company collapses and those investors have lost 70% of their money, which is not very good. And this highlights the whole problem with Europe. Politicians looking to get re-elected and reacting to situations with no true long-term plan. And for as long as that persists, we'll have volatility on markets, we'll have difficulties in Europe, and we will continue, therefore, to be cautious, and for our lower risk portfolios, we will keep some insurance in place.